Probably the number one question I get asked when I'm on a listing appointment is, what is your commission? And really why the seller is asking that, because they want to know how much they're going to net after the sale. So today we're going to review over not only that, but all of the other expenses you can expect when selling your home. So I have a list of items right here. It's broken down into 3 categories. The first being optional or negotiable, the second being non-negotiable, and the third being other or miscellaneous things to consider. And be sure to stick around to the end of the video because I'm going to go over a real world example with real numbers so you can get a better idea of what this all looks like. So we're going to start off with the negotiable category. And these are items that are actually listed out in the South Carolina contract. And they can be designated to either the buyer or the seller. And that's why they're negotiable, because they can go to either side. Now, keep in mind, I am in South Carolina, so things might look a little bit different from state to state, but this is how we do things here. So for this section, we're going to go in order of how they pop up on the contract, the first being transaction costs. This includes things like your certificate of assessment, your working capital, your capital contributions, or other HOA transfer fees. This all has to do with the HOA, and on the South Carolina contract, there's actually a little checkbox that says either buyer or seller. So your certificate of assessment is what is used to get all of the documents from the HOA management company. So the lender, the closing attorney, the buyer, they all need official documents and information from the management company of the association, and they have to pay a fee to get that info. It's usually somewhere between like $200 and $500. Now, your transfer fees, like your working capital and capital contribution, those are typically one-time fees that are paid every time a property is sold or transferred in that association. Now, not every association has this fee, but some do. And it can be as little as a $100, $200, $300 fee, and I've seen it go all the way up to 1%, 2% of the sales price. So really it can start to add up. Now, typically when you're negotiating this point, I always say if there isn't any working capital or transfer fees, things like that, then the most you're looking at is the certificate of assessment, which again is only a couple $100. And if there's no HOA, then this section just doesn't apply. So the next section actually pops up right under those transaction costs, and this is the buyer transaction costs, otherwise known as closing costs. So there's actually a little section, a little blank space where the buyer will write in a specific dollar amount to go towards their closing. Now, if this section here is left blank or there's a 0, that means the buyer is not asking for closing costs. Now, sometimes buyers do ask for closing costs because they want help paying for those fees up front. This way they don't have to drain their bank account when they're buying a home. And of course, this is always negotiable, so it doesn't necessarily have to come out of your pocket. If you're okay with selling your home for $145,000, that buyer might offer $150,000 and ask for $5,000 in closing costs. This way it doesn't have to come out of their pocket. Now, the next thing on the list is going to have to do with repairs. Now, this isn't necessarily something that you're going to pay at closing, but these are items that you might have to take care of before closing. So items that might pop up on the inspection report that have to do with heating and air, plumbing, electrical work, leaks in the roof, structural issues, environmental concerns. Those are all going to be items that the contract says the seller has to take care of. Otherwise, the buyer can walk away without losing their earnest money. Now, of course, this section is negotiable as well. Now, you might not want to actually do those repairs, and instead you might want to give the buyer a credit at closing. So instead of doing those repairs, you'd write up an addendum, or your agent would write up an addendum to the contract saying that the seller is going to pay X amount towards closing costs or lender credits at closing. Now, this is a fee that, yes, you'd pay at the closing table instead of actually doing the repairs. And you always want to write in the addendum that the fees are going towards closing costs or prepaid credits, because you don't want to say it's in lieu of repairs, because then things get a little bit muddy at the closing table. The next thing you're going to see pop up on the contract is the CL100 or the termite inspection. Now again, this is a section where it's going to say either buyer or seller, and again, it's a negotiable part of the contract. Now, when it comes down to this part right here, whether I'm representing the buyer or the seller, I always say let's ask for it, and if the opposite side doesn't want to pay for it, it's not the end of the world. This fee is typically about $75 to $100 depending on which company you end up using. And the last thing that's going to come up on the contract that is negotiable is a home warranty. So you might be selling your home and your appliances might be out of date, or maybe they're brand new, but the buyer still wants a home warranty just to cover themselves just in case. This fee ranges anywhere from $400 to $600. You might see that pop up on your contract. All right, so now we're going to go into the non-negotiable items. These are things you're going to pay as a seller no matter what. First being the real estate commissions. Now, this is negotiable with your agent as far as the percentage that you're going to pay, but you're not going to be able to negotiate with the buyer. As the seller, this is something you're going to pay, and that one fee that you negotiate with your agent is going to cover both the listing agent and the buyer agent commission. That commission is typically split right down the middle between the listing agent and the buyer's agent. So if you're talking a 6% commission, 3% would go to the listing agent and 3% would go to the buyer's agent. If you're talking a 7% commission, 3.5% and 3.5%. After commissions, the next expense you want to take into account is going to be your tax stamps or transfer fees. This is going to equal $3.70 per $1,000 of the sales price. So if you sell a home for $300,000, you're going to multiply $3.70 times $300, and that's going to get you your tax stamp fee. And the last thing on the list is going to be your attorney's fees. And this can range depending on which closing attorney you use and what their fees look like. I always tell my clients to expect somewhere between $500 and $1,000, and sometimes it's a little bit less than that. Now, the last thing we're going to go over here is taxes and your mortgage. So here in South Carolina, we pay taxes at the end of the year. So typically a tax bill comes out mid-November. So if you sell your home before November and you haven't paid your taxes for the year, you're going to have to expect to pay your portion when you sell your home. Now, of course, this would be prorated depending on how many days you owned the house that year before you sold it, but you're going to have to expect to pay those taxes if you haven't already done so. Now, if you're selling your house at the end of the year and you already paid the taxes for the year, you can expect to get a little bit of money back as the buyer pays for their portion at the closing table. And the last miscellaneous expense that we're going to talk about is your mortgage. If you sell your home and you still have a mortgage on the property, let's say you sold your home for $150,000 and you still had a mortgage for $100,000. Obviously, that chunk of $100,000 has to go to pay off the mortgage before you can get any of your proceeds. So that's going to be it for all the expenses, and what we're going to do now is hop on my computer, pull up an Excel spreadsheet, and go through that real world example that I was telling you about earlier in the video. Before we do that, if you don't mind, I'd really appreciate if you scroll down and hit that like button and turned it blue. Not only does it help me out and helps the channel grow, but it lets me know that you like this video so I can produce more content like it in the future. And while you're at it, don't forget to subscribe if you haven't already done so. Now let's hop on the computer and go over this example. Okay, so before we get into the numbers here, I just want to show you real quick what an actual settlement statement looks like. So this is what you'll get from your closing attorney, hopefully a few days before closing. This way you can review it over and make sure all the numbers look correct, and you will actually sign off on a copy of this at the closing table. So this is what breaks down all of the numbers, shows where money's coming from, where money's going, where money's owed to. We're not going to do the example on this actual form right here, just because it can get a little bit confusing. Sometimes they're difficult to read. They actually look different every time depending on your closing attorney. So if you want to go over this in another video, we can do that. But today we're actually just going to jump into an Excel spreadsheet and go over the numbers there. So for this example, we're going to be using a $200,000 sales price, and everything's going to be based off of that number. And we're going to start with the non-negotiable category and start with the commissions, because these are numbers you can start to figure out before you even list your home. So we're going to use a 6% commission broken up 3% on the buyer side and 3% on the listing side. So basically what we're doing is $200,000 times 3% for each side, and then we are adding those numbers up to total a commission of $12,000. The next thing is going to be the tax stamps. Again, this is $3.70 per every $1,000 sold. So basically we're going to divide 200,000 divided by 1,000 gets us 200, and we're going to multiply that by 3.7 and get us $740. And for the attorney's fees, we're just going to go ahead and drop in $500 here. We're going to add up all those numbers, 12,000 plus 740 plus 500 to get us $13,240. Then we're going to move on to the transaction costs. We're going to say that we're paying for the certificate of assessment for $350. We're going to say there's no working capital. We're not going to pay any closing costs, and we're going to pay the CO 100 for $85. We're also going to say that we might have done some repairs, but also gave a credit of $250. So we're going to add up the $350, the $85, and the $250 for a total of $685. Now, the last thing we're going to go over here is the miscellaneous items. We're going to say taxes for the year were $1,000, and we're going to say that you owned the home for 300 days. So we're going to divide 1,000 by 365 days to get a dollar amount per day for the taxes. And then we're going to take that number and multiply it by 300 to get $821.92. We're also going to say the mortgage payoff was $57,000. We're going to add up those two numbers to get $57,821.92. Then we're going to add up the three totals for a total of $71,746.92. We're going to subtract that from $200,000 to see what the seller is taking home. So what the seller takes home after this example is $128,253.08. Now, I know we went over that a little bit quickly today. If you want to see another example broken down on the actual settlement statement, go ahead and leave a comment down below, and we can do that in a future video. That's going to be it for this video, guys. I hope I kept things nice and simple for you. Hopefully I cleared some things up or answered a question for you. If I did, go ahead and scroll below and leave me a comment. I'd love to hear your thoughts or maybe ideas for some future videos. All right, I'll see you next time. Peace.